All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. We're about a minute away here from the 2:30 time slot, 2:30 Eastern time slot. So let's go take a look at the challenge, and we'll take a look at a few other things. Neither Disney or Bank of America are at their stop or profit levels, so they're not at their time stop levels. So it's just a matter of filling in the prices here. So Disney is 565 and Bank of America is $1.92. So 192 here, 565 here, and basically doesn't create a whole lot of change here. When it comes to the challenge, we're still sitting with about 10,500 in gains or 10,700 in gains and running here. So we have about 6,800 of that tied up in the two trades. And then we have cash, plenty of cash for another position. Now, speaking of another position, there are no new entry triggers here this afternoon. And I'm a little disappointed about that. I thought for sure we'd get a FedEx trigger. And you know where I stand with FedEx. I'm very bearish on FedEx overall. I'd love a chance to play it to the downside. And it has a 3-7 downside crossover. Has everything I want to see, from just a visual standpoint. But does not register as a signal. Consolidation risk factor is very high on it. I was kind of surprised to see that, but it is what it is. So I'm not going to go and enter FedEx. I think it's an interesting risk reward setup right here, but not something I can go trade for the challenge. We have some other crossovers that are happening, but aren't even close to signals. Bristol Myers has a 3-7 upside crossover to it. We have EOG Resources crossing to the downside on the 3-7 here. You'll notice it's moved about 5%, $5. Average true range on this is about 250, so it's moved about two average true ranges to get to that, and we're not going to see those signal, right? There is a parameter built in to where if it's moving two average true ranges to create a signal, it just isn't a good option trade. So the algorithm spits it out and says, "Forget you." And then Chevron, downside 3-7 crossover, but is not qualifying here, as the consolidation risk is quite high on it. But definitely some bearish charts in energy today, all over the place, from Halliburton to Schlumberger to EOG Resources. We have Apache. We have Valero. It's ugly city in the entire sector here today as oil continues to drop. I mean, oil's down, almost 5% here today. One of the worst days for oil of the year. We had, 3 other days that were like this here for oil this year, but it is a pretty sharp drop in the price of oil here today. All right, so no changes here on the challenge. Now, this morning, after I got off video, a friend came, visited me, and he is trading the challenge. He's not a trader or anything, but he's trading the challenge right along with us. And he didn't get out of American Airlines, and he figured, well, I'll just come talk to Jeff and see what Jeff thinks. And so we're sitting down and we're talking about American Airlines, and I got out of American Airlines here this morning, and sold out, and we took a small gain, not even worth mentioning there on the trade. And throughout the day, American has been bleeding on lower. But he's talking to me about all the stuff that he read about American Airlines and, this and that and the other, and, talking about some of the positive qualities of it. And, hey, this thing could really run, and, I have earnings, and I have this, and I have that. And I looked at him, and I just said, look, I said, if you want to hold American, go for it. But I need you to keep something in mind if you're going to follow along with the challenge. The challenge is about a process. It's not an event. It is a process. It's a process of putting the odds in our favor. It's not an event to try to take a certain trade, to rationalize and to justify it, to hold it or sell it, or to do, something with it, or to add more or subtract less. That's not what the process is. It's a process of many trades, of putting trades in our favor. And the one thing that American Airlines did this morning is it hit the time stop. What do we know about that? We know that after a 3-day period, when there has not been a move of two average true ranges, the odds of the trade working get cut dramatically. It's not by a little bit, it's by a lot of bit. It doesn't mean the trade still can't work, right? It doesn't mean Americans still can't, fly high and, and zoom higher. But we know what the odds are. We run with the odds. The decisions are based on the odds. They're not based on all the other, fun-fetty facts out there about American Airlines. And, this is something that, I've talked with others, about, and, and I've had a kind of a similar kind of conversation. But one of the things that is hard about following an algorithm or a system, right? And it was difficult for me yesterday. I hated Disney, in terms of getting into it. Why? Because of some market concerns, right? And I'm looking, I go, man, I have two positions on the board. The market's, market vibe is neutral. The market here is selling off. Do I go get into Disney, right? It's just, but it was a signal, right? And what do I know? I know what? I know that the odds are in my favor with the signal. No matter how much rationalization or additional analysis I add to it, it doesn't change those odds. And so, okay, all right, I'd bite the bullet, go out and buy Disney. Was it super comfortable? No. Was it super hard? No. Right? It's not, it's not that big of a deal. But, as we go forward, with every individual trade and trade adjustment and things like that, look, there's always different decisions that can be made, and there's always, other analysis that can be brought in. That's just part of any type of trading or trading system or anything out there. The opinions are a dime a dozen. There's so many, right? But bear in mind, the challenge is about. Is about a process. It's about a 4-month process. And it's not contingent on one trade working or one trade failing. It's not contingent on, well, man, I got out at this perfect time or I didn't get out at this perfect time, right? We're going to have whipsaws in the challenge, something like a CSX, right? Get in, nice signal, boom. 2 days later, oh man, knocked on out and, get in on the nice signal the next day, boom, knocks me out. And 2 days later, flies on higher, right? There's going to be those aggravations. Those are going to be part of the process. By putting odds in our favor, it's not 100%, right? Nothing, there are no 100% odds out there. And so it's just one of those where keep that in mind. Yes, you could take a trade and you could try to, rationalize either holding or selling or any of that. But there is not one trade that is going to make or break the challenge. There's not a singular trade where that will happen. Right? Maybe if we get super lucky and, we're in a trade like Disney and we wake up and it gets bought out and the stock surges 50%, then, maybe it makes the challenge, right? But let's face it, we're not playing for the anomalies, right? We're playing for the probabilities, and the anomalies will come, and, we protect ourselves from the anomalies with, the time stops, with the price stops, and they don't fully protect us, right? We're not fully protected there. And then with the exposure, right? So those are the things that will, kind of protect or, kind of keep keep some of the keep one trade from making or breaking the challenge. And that's the idea here. And for those of you who are around when we did kind of the last phase of testing for the algorithm, we looked at different option values and different, using different options. And one of the reasons we're using the options, that we're using is because with those options, we can go on a streak of 3 to 4 in a row, 3 to 4 losers in a row, and the challenge still survive and have a chance to really thrive, right? If we go with those shorter term options, that's not the case. 1 to 2 trades, boom, we can be done, right? And so there's no need to take that risk when we can have the growth. But just kind of keep that in mind. As I said to my buddy this morning, I said, look, you can look at any of that, and yes, you have some rationale and you have some justification, and there is that. But at the same time, look, it's off of the radar for the challenge, meaning, it's no longer in play for the challenge. Why? Because the odds are no longer in favor of something really bullish or something really bearish. And that's the bottom line when it comes to the algorithm. So, if you look at it and you say, hey, I think the odds are strongly bullish, I'm going to go with it, great, right? You can come up with whatever story you want to get that. And there are some decent stories for it, right? I mean, we saw some numbers out of Delta this morning, which were pretty nice, right? Which were really nice. But we have oil prices dropping, big here today, which normally leads the airlines lower. We've looked at that in the past, but anyway, that's all I'm going to say here about American Airlines. And whether we got out this morning or we got out this afternoon, right? Either one, yes, it's going to have a probably $600-700 change in the challenge. But, that's not a material change to the challenge. That's not going to affect the challenge, going forward in terms of exposures, next trades, or anything, anything for that matter. So, whether it was an exit this morning or this afternoon or, it's not game-changing, right? And please, just kind of keep that in mind as we go forward. Most of these decisions, they're just not game-changing. They're not going to be. And I know when it comes to trading, there's a lot of emotion sometimes. And, people get caught up and, man, what's this doing? And, man, where did it go over the last 5 minutes? What did so-and-so say? And, what happened over here? And, wait, why did it bump up? Ooh, what was that volume? Right? There are a million factors to look at. And, with the challenge, it's just that kind of stuff is just absolutely been built out of it, just absolutely built out and gone. Okay. Now, my buddy and I, we had a conversation about the market as well, and he brought up and he brought up this term uncertainty. He said, "Man, it just seems so uncertain out there. Like nobody knows what's going to happen." And I said, "Oh, okay. Unlike what? What market is there not uncertainty, right? The only market where there's no uncertainty is the hindsight market. The hindsight market, there is tons of certainty, right? There's no uncertainty. We know for certain what American Airlines is going to do the next day. After this day right here, we know for certain what it's going to do the next day." Right? Hindsight market has no uncertainty. It is clear as can be. But as soon as you have empty space here, right? As soon as there's empty in the chart, well, now there's uncertainty, right? Now it's, what could happen? What are the factors? And there are always infinite number of factors that are out there and that are in play. But I've made this argument, before, earlier in the challenge, talking about the environment of the market into this summer. This is one of the most certain market environments that we can experience. What makes me say that? Why would I kind of step in and say certain? We know what the environment is. We know that stocks are overvalued. We know that there's trade war drama. We know the Fed is going to cut rates. Yes, how much and when, sure. But we know the Fed's cutting rates. We know the incentives of the major players in the market. The ECB, right? The European Union, the U.S. President, the Fed here in the U.S., Chinese Premier. What are all their incentives? All the incentives there are to drive the markets higher, right? We have that. We can see that. That is absolute, just certain. Is it every day they're worried and tinkering or influencing? No, but we know overall they're there to drive the markets higher because it favors every single one of them. Are there others that would like to see the market lower because it favors them? Yeah, but they're not the ones with the most influence or the most position of power, right? Most analysts who are calling for sell-offs, right? A lot of them are attached to broker houses that are underexposed that need some sell-off to be able to get in. Right? There are those plays, but we are looking at a market right now where there is more certainty in the market and more normality in the market than in most times. Right? Right here, last year, October, November, this is uncertainty. Chop, drop, gap up, gap down, moving outside the average true range almost every day. I mean, day in the market, it's, okay. Right? There's no movement here. And in fact, in the last month and a half, there have only been 3 days where the market has moved outside the average true range. That's not an uncertain market. An uncertain market is one that's moving outside of its average true range. A big up day, big down day, big up day, big down day. Now, I understand you turn on the media and it's designed there to grab your attention, so they're going to have hyperbole and bigger statements. But when it comes to the overall market and what's going on, we know big money has been willing to get in, right? They're not too eager to chase, tremendously. After a nice little dip, they're happy to jump on in. But now we're at new highs, right? They're not as eager to just say, well, let me just jump in here and there, right? They're not needing to, right? This isn't a market that's going to get away from them. Yeah, is it going to change 3-4%? Sure. But is this a market that has, 30% upside? If they don't get in right now, they're going to miss it? That's not how they view it. Does it have 30% downside, and if they don't, short everything or sell everything right now, they're going to miss it? Nope. That's not how they view it, right? The big money has a very certain view on the market right now, and it's been the same view that they have had all summer here so far. And it's not changing, and it's one where, you just kind of follow some of the price action and go. And you can't expect for, massive change to be happening in the market each and every day. Now, you know me where I sit in terms of the market, when it comes down to it, the market vibe, right? Let's see if I can pull that up here. Maybe not. All right, here we go. But, over here on, TM Academy, if you come in, you can see what the market vibe is. The market vibe is neutral right now. And it has been neutral for, 4 days now? Right? It's been neutral for 4 days. It went to neutral because the market metrics stopped moving. They absolutely just stopped moving. There was just no up or down in them. They just kind of quit. And since then, they've been moving up a point, down a point. And that's what we're seeing in the metrics. Just zero movement. But one thing to keep in mind, so far here in 2019, when the metrics have been neutral, the overall mode here has been fairly bullish. Now, that's not the case if we look back to when the indicator was developed back here in 2015. Neutral is slightly lower. In fact, there have been 343 neutral days, and it's been a total of minus 2.59%, right? Very, very little movement on the neutral days to the downside. But this year, it's been a little different. Just a little bit of movement here to the, to the upside. And so, we look, we know what the metrics are, we know what the incentives are. And so what uncertainty is there, right? There's not a lot of uncertainty out there in the market. And so from a trader standpoint, right, if you're in that camp of you just look at a ticker and you want to look at the chart and say, well, is it going to go up or down? Yes, there's going to be uncertainty. If you're going to go and look at, oh, this was a big mover today. Oh, is it going to go up or down from here? Yes, there's going to be uncertainty. But when it comes to understanding what the overall market is, it's one of the more certain environments that we have seen, in quite some time. And it is one where, how do you react? How do you deal with it? Well, you stick to, what you like to see in terms of entry and exit and run with it from there. There is a lot of differentiation in this market, and we've talked about this concept, quite a bit, and today's just another really good example of it. But by differentiation, I just mean it's not, all this money moving from stocks to bonds or bonds to stocks. It's money moving around stocks. And, you look at energy today, down almost 2%. You look at real estate, it's up almost 2%. Right? If you're an equity investor and you have, a higher real estate exposure than energy exposure, this is a booming bullish day for you. If you have a lot of material and energy exposure because they've been outperforming recently and no real utility or real estate exposure, today's a disaster. Today's down big. And this leads to a lot of, some of the hyperbole talk that we see in the market, because just different traders and different investors are experiencing the exact same market in a very different way, right? It's very different for them based on how they're allocated, the stocks that they're in, and this continues to be a market where money flows through the market, not in and out of the market. And we see the market generally just push on up with the, normal just fund allocation monies that get dumped into it month by month. And, that ultimately long-term pushes things up. But, we continue to see these rotational days, and today's just another one of them, on the board. And so is it a pretty bearish stack today? Yeah, it is, right? You have real estate, utilities, consumer staples, healthcare. They're your leaders. Consumer discretionary, industrials, financials, materials, energy, right? These are the sectors that when there's, big raging bull market, these are the sectors that are normally green. And they're all red here today. So it's kind of easy to make a bear market case with today's action, right? I mean, you go and you look and you say, well, the small caps, they're down over 1%. I mean, these things are getting ripped. Transports here today, they're down 1%. They're getting ripped. Some of these stocks are really kind of pulling back aggressively. Financials, they're selling off here today, and it's kind of easy to look at that and say, well, yeah. But when you look at these in with some sort of time context, right? So let's take a look at the S&P versus, small caps, right? And you see me pull this up from time to time because it has, this is an input value when it comes to the market vibe. But if we look at small caps versus large caps, right? It's about a 1.8% differential here in terms of the difference between the two. But here of late, we have seen small caps really kind of climb back. And, over the last 30 days, we have both of these up, very sizably. And, without a differential here that's overly bullish or overly bearish. We look at the neutral market vibe, this is one of the reasons. If we look at transports, they're showing something very similar, right? If we look at the S&P versus emerging markets, the performances are about, versus transports, but let's go to S&P versus emerging markets, right? It's pretty similar, right? There's not a huge performance gap between a lot of these, major components in the market that are kind of bullish, that typically signal bullish or bearish. And it's one of the big reasons why we see the market vibe neutral. Now, you'll notice that the market vibe is still a 5. As of yesterday, it's a 6 right now. But it's still a neutral signal. But, the bulls have more control of the market internals, right? They have more control of them. but we're not seeing the market internal shift, which is what creates directional signals here with it. And so just the overall kind of flatness of them, is leading to that kind of neutral signal. And, kind of my talk of, hey, chop. Yeah, I think we have a good chance of seeing the S&P hit 3,000. In fact, that could happen in one single solitary day. We're not that far away from it, right? That could happen by tomorrow morning. And, pull on back. There's a lot that could happen there, with that. But, when we see the bullish percent index, unchanged here today, not a whole lot in it. And so, on aggregate, the internals, they're just, continuing to show kind of neutral, and that we're in this kind of choppy, rip and dip environment. We're not in a massive trend environment, even though the markets are sitting near some new highs. Okay. So anyway, that's my take on the market. It's really, it almost feels fashionable to be bearish right now, which is interesting. You've heard me comment on that a little bit in the past, but almost feels fashionable to be bearish. And ultimately, the bears could be right, and they could be paid off. But so far, we're not seeing the typical things that we see before some big, bad, bearish drop. Now, if you're an EOG investor, you're going to disagree, and rightfully so, right? If you're a Chevron investor, you're going to look at it a little bit differently, and rightfully on 10:30 and 12:30 Eastern, so about a 2-hour difference there. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you tomorrow. Take care.